our second quick fire session, please join me in welcoming our official after-party sponsor and Even Financial CEO, Philip Rosanna. This interview will be led by Benzinga CEO, Jason Resnick. Come on up, guys. Let's give him a hand.
Which one's your good side? I don't know. What's my good side? Oh, wait, we got to look. This is what we got to do.
There you go.
See? All right. We look the same. Hello, guys. You guys are lucky to be here for this one. This is Philip Rosanna, Even Financial founder.
Hi. Thanks for having me, Jason.
Yes. So I've known Philip. Actually, I've known him for many years. I know you were at Orchard. I know we talked one day, you're going to be like CTO at our company. If we were based in New York, we were based in Detroit. So it didn't really work out, which I'm glad for his sake it didn't.
Maybe I would have liked Detroit.
Yeah, maybe you would have. Who knows? Maybe you'd be like the guy owning all the buildings these days. You never know. So what made you, what made you start Even? You could give a little bit of how you were at Orchard, or different things.
Yeah, I mean, the quick spiel is Even Financial is an open API to power acquisition, engagement, and monetization of financial services in any consumer-facing touchpoint across all the financial service products that a consumer might need, cradle to grave. So that's starting with credit, savings, wealth management, insurance, et cetera. But we started Even, because of learnings we had at Orchard, which was that there were all these signals we found that we could use to optimize our purchase of debt. We were managing money for institutional investors. That were really powerful at generating alpha. But it wasn't available to us. We needed some way to hook into those data streams. And so the notion was to create a platform that would sit between the places where the consumers are, the financial service companies who want them, gather that data, and then make it actionable.
So when you started Even, was that always like the vision?
I mean, that was the initial vision originally for online lending. What ended up happening was we discovered a much bigger opportunity, which is that we see just this constant motion towards partnership in financial services. Literally everybody wants to add financial services to their application, to their experience. And it's hard to do that at scale considering how fractured it is. It used to be a bank had everything a consumer needed. Those components are breaking up. They're going direct to consumer via mobile apps, monoline products. And then you have all these channels that want to add them. So you have this really complex set of many-to-many relationships where you need to really deal with a highly regulated and sensitive set of consumer data, and you do have to do it in a way that actually generates profitable accounts. That's very challenging to do without a platform in the middle, and that's what Even is.
Got it. So I think to take people back, Even Financial so far has raised $50 million, not 15, not 25. Yeah. I just told someone, no, I think it was 25. I'm like, no, 50.
Yeah, it's $50 million.
$50 million.
Actually, we have another 2 about to close that we can't announce yet.
2 billion or 2 million?
2 million.
Is that my money?
No.
Is that Benzinga? Just kidding. I don't know. Someone strategic, I bet, right?
Yes.
Exactly. But I don't know who's in the audience, entrepreneurs, founders, data people, whatever it is. I was sitting with Phil at the Ace Hotel 2-3 years ago.
Yeah, something like that. Before the A.
Yeah. And he was not
about $45 million ago.
He was not as happy as he's looking today. It was a moment of not trepidation, but I don't know, remember that time?
We were at a weird moment where we had really figured out product market fit, but it hadn't shown up in the numbers to the extent that investors would really need, right? So finding investors who are ready to take that early step was hard, and it ended up coming from surprising places like institutional capital rather than venture capital. Once that happened, then the VCs were all over it again. But we really needed American Express to change that dynamic. And so they, plus one of our clients, actually came in for $3 or $4 million. That changed the narrative. And then the traditional VCs were back into it.
Got it. But wherever you are, it's never it's never the end until you say it's the end.
Mostly.
Well, I guess it depends on what kind of company.
Yeah. Hopefully, if you're lucky.
Wait, before Orchard, what were you doing?
Software engineer. So I was working in other tech startups in New York, actually. Ian Rosen, who's here with StockTwits, was co-founder at Even, and I also worked with him on a project prior to Orchard.
Oh, yes.
And he was also one of our first investors in Orchard.
The Twitter thing that we...
Yeah, the Twitter thing.
With Rob as well.
Yeah. That was interesting.
Media Amp.
You know, it's funny because the Russians really took that technology and those concepts and applied it to elections.
Really,
right? We were trying to do it with financial services.
You were. I remember that.
They ended up influencing elections with the same concepts.
It's like old times. I remember that. All right, now we have to go right into the even stuff. Okay, so how does the API work? Will you break it down for us?
I mean, we have a really simple API. You send us consumer data. We figure out what financial service products a consumer needs. But then the harder part we do is we integrate with 3 or 4 different methods of underwriting and decisioning around that consumer, possibly run by the bank, possibly run by data providers like Axiom, possibly hosted by us to actually get a firm offer of credit for the consumer in real time. And then we use all this machine learning to actually figure out the strength of fit to the consumer. And all this happens in under 400 milliseconds. So you're able to put a very specific firm offer in front of the consumer when they need it. And we're about to actually make an acquisition in the life insurance space to add that same capability within life insurance. And then we'll be doing that as well with mortgages for pre-approvals in the second half of next year.
So basically, you're not just like an aggregator. A company like any company, be it a Rocket Mortgage, they could use you guys.
Yeah. The difference between us and I'd say what you would say is lead gen aggregators like LendingTree and Karma is that they really are creating consumer brands that try and disintermediate banks or brokerage or financial managers from the consumer and arbitrage them into the highest bidder. Our approach is not to be a consumer brand, but business to business, and a platform that gives complete transparency and control into either side of the market. So you can establish your own relationships, manage those, make sure they're profitable, but never lose control of your brand.
But you're also going into the space where you're helping these banks approve it or not approve it.
We're helping them do their decisioning. We never do decisioning because we're not ever going to underwrite. That's regulated in ways we wouldn't want to touch.
Got it.
But we would execute their underwriting on their behalf in some circumstances.
Got it. Because I just envision like, okay, you're an API that you just said, okay, if you want to be able to search a bunch of banks, you could do that. But you're way more than that.
We can hook into their underwriting systems, and we also can onboard their underwriting criteria into our platform and execute in real time against consumers, given the data that's available where they are. So an example of that we're going to be going live with is one of the largest 401k management platforms in the country is going to be integrating us to cross-sell other products. Because one of the things they'd like to do.
Which one is it?
Can't name them yet. But they don't like it when consumers borrow against their 401k.
Can't or won't?
Can't.
Okay.
They don't like it when consumers borrow against their 401k or do an early withdrawal because it reduces AUM. So they want to give the consumer an alternative to cashing out. And so that could be a loan or a HELOC or something like that and keep their money under management. And then there are other opportunities as they progress in life insurance and things like that.
Got it. That's very cool. Now, you've been around Orchard. You guys, you're in this industry. Mm-hmm. Where do you think these, what technologies financial institutions investing in and why?
So financial institutions aren't really diversifying the tech stacks, the big ones that we're seeing, because we work with like the Citis, the Amexes, the Goldmans of the world. They aren't really changing their tech stack. They are changing how they leverage it to put more APIs out there for companies to integrate with. But the thing that they are struggling with and always debating is how much of their core banking functionality do they want to expose, because it's a tension between undermining basically their value prop as an institution versus commoditizing their functionality for third parties to leverage.
Got it.
And they sort of see what happened with Amazon, right? Amazon did the same thing around Amazon Web Services and a lot of their functionality. Worked very well there. Is it going to work in banking? And is it as necessary in banking where they have more of a regulatory mode?
Because it's open banking, like anyone can be a bank these days, right?
Yeah, and also it's not really differentiated. Like at the end of the day, a purely digital checking account is a purely digital checking account. What's the differentiation?
So how do you?
I don't know how the banks differentiate their products. They have to do it by serving consumers better and offering more value, but that's not necessarily going to come from core banking functionality. It has to be incremental services or new types of credit products or really making the consumer's life better, not just being the bank that they used to be.
Because getting small business accounts are really difficult. The interest rate's 0.10, 0.2. To get 1%, there's a few now that are in the game.
I mean, it hit 2.85 at one point that we saw, but now it's coming back down, which is really annoying.
Well, Trump says there's no thing. He's lowered rates because that makes the accounting better, but it hurts companies that have cash.
Yeah, it also just subsidizes like the boomers like for however long because they could keep refinancing and capital cheap to buy homes.
Right.
Meanwhile, none of us can save money.
None of us can save money, and no one asked that question. I don't it bothers me to the nth degree. Someone needs to write an op-ed about that. So where do you see this all going in the next few years? I guess.
Well, I mean, I think the overall narrative of partnership in financial services isn't going anywhere, and it's accelerating. We believe we're bringing the fundamental infrastructure and platform technology to facilitate that, right? And so we think we can be a cornerstone of the ecosystem, right? And really, there are other companies that have done that in other industries. Ellie Mae, right? Freddie Mac have really built somewhat similar concepts and single products, right, and legacy systems. We think we can be a new kind of platform and infrastructure to facilitate financial services that hasn't been done before.
So basically a back end to a lot of these things where you're enabling transactions.
Yep, exactly.
What advice could you offer people in the audience if they have a fintech startup or something like that, since you've been through it many a times?
One thing that's really worked well for us is always starting by considering your product first and foremost an API, right? And if you build the API first and you build all of the things that you do as APIs first, even if it's just to be used internally, right, then a lot of opportunities become discoverable over time, right, in terms of commercializing and exposing them. And that's really what Amazon kicked off in the early 2000s. We adopted that philosophy and it's worked really well for us.
Did you do that at Orchard, build API first? Or?
Yes, but with less of, I'd say, the philosophical rigor.
Got it, and that's what you guys, that's an interesting takeaway. Your startup, build API first, in the sense you'll figure out the business after that, because if you build the API first, you can go anywhere. And Benzinga, we're a financial news publisher, and we're in most of the online brokerages, and we didn't necessarily think of it that way, but that is probably the change of heart, because that's how you grow your business. Yeah.
Exactly. It's free biz dev.
All right, well, thank you, Philip. Anything, if anyone wants to get a hold of you, do you have an email or anything?
Phil with 2 L's at evenfinancial.com.
All right, well, thank you very much. Congrats, $50 million raised here, and I remember 3 years ago when you're going to be our CTO, so very nice. All right, congrats, man. Thank you.